we have a lot to cover today. It's a vast topic, complete litigation process, covering show cause notice, adjudication, and appeals under GST law. We have about 3 hours torturing session, and I'm sure all of you will bear with me. I will try to take a 5-minute comfort break at about 5:30, about after 1.5 hours. Today, my endeavor will be to not only deal with the legal aspects of these litigation-related provisions of the CGST Act, but also just to highlight certain practical aspects of the litigation process. There are about 170 slides in this entire presentation, which GST Cornor will arrange to share with all of you. Don't worry, I do not intend to, nor would it be possible for me to cover all the 170 slides, but it also contains statutory provisions just to make it as comprehensive as possible. I have avoided putting the statutory provisions governing the appeals in this presentation, only because then it would have become too bulky. Because to put all the section 107 to 121 into this presentation would have been quite too much. So I have just avoided them. We will also have a question answer session as the organizers have advised me at the end of the session. I'll try to deal with the questions as far as possible, considering the time availability and the comfort level of the participants. Before I start with my talk, friends, I will, very heartily express my gratitude to GST Cornor for giving me this opportunity to share my views and thoughts on these all important aspects of the GST law, and for that matter, any tax law. It has always been a pleasure on my part to, whenever GST Cornor have been, they are very active on this front, trying to advise, trying to guide, and try to keep the taxpayers and tax professionals across the country update, and putting in a lot of efforts, lot of research. It is really heartening to see that this one particular portal is really trying to do their utmost to keep the people updated and fully guided on the various aspects of this law. And again, it is my pleasure today to be on their platform and share my thoughts on this subject with you. I'll come straight to friends' show cause notice. All the tax laws, be it direct tax laws or indirect tax laws, have never been immune from the litigation. The litigation has been banned of the tax laws particularly, though it may be boon for the taxpayers and maybe boon for the tax professionals. We have all been frequently reading about the huge pendency of the cases at the tribunal level, high court level, and Supreme Court level. And the story is more or less the same on both the taxation fronts, whether it is indirect tax or direct tax. In indirect tax, the position is much more serious, with the thousands of appeals still languishing for the final hearing in the various benches of the tribunal across the country, covering customs, excise, and service tax. The causes behind the tax disputes need not be really, unknown. We may not be very much unfamiliar with that. We all know the reasons. The first and foremost is vague and poorly drafted tax legislations. And as Voltaire has famously said, the worst laws are the poorly drafted laws are the worst sort of tyranny. Arbitrary interpretation by the revenue officers. Once the tax legislation, once the tax provisions are not properly drafted, then it gives the scope for arbitrary interpretation to the revenue officers, and at times even to the taxpayers as well. Then, whereas the tax avoidance tendency of the taxpayer also obviously leads to the tax disputes. After all, as somebody has very famously remarked, tax avoidance is probably the only profitable business remaining in the today's world. Pressure of revenue targets. For some reason and another, India has remained the target-oriented society as far as that revenue is concerned. Government after government, year after year, through the budget have been actually fixing the revenue targets. It may be inevitable, but it is the process through which these revenue targets are being fixed, and the very impracticality at times of those revenue targets, but at the same time putting unsurmountable burden on the revenue officers to meet those targets. We got there somehow, who the hell cares how? That attitude which is getting generated amongst the revenue officers, which is the probably the biggest cause for the disputes. And at times, as I have been always saying, a target-oriented tax regime will ultimately become terror-oriented, terror-driven tax regime. Then frequent amendments. We are witnessing this already in the just 4 years short lifespan of GST. If one would really get into the original law, particularly on the implementation aspect, procedural aspect, returns related aspects, that what was the original provision and how many times they have been amended, one would really get lost on this jungle of amendments. Then the all pervasive retrospective amendments. We have already seen 2 major amendments which have been made retrospectively by Finance Act 2021 in the CGST 2017. No doubt, the one amendment to Section 50, subsection 1, relating to the interest liability only on the net cost portion, may be a beneficial one. The point is this: could not this have been avoided in the first place? Why there has to be an amendment, and that also retrospective? That is the moot question. This entire controversy, which started with the Orissa High Court judgment in mega engineering, could have been avoided with the some pragmatic and some drafting with the foresightedness. And then comes the doctrine of mutuality and the attempt to whisk away that impact of this doctrine of mutuality as propounded by Supreme Court in Calcutta Club's case, and the amendments made to Section 7 read with Schedule 2 to the CGST Act. However, fortunately, as of now, this amendment has not yet taken into effect. It is a dead letter in the form of dead letter in the CGST Act, having become part of it on 28 March 2021, but not yet notified by the government. So today, the doctrine of mutuality prevails. But then once it is made live by notifying a particular date by the government, it will take effect from 1st July 2017, and all hell is going to break loose among the taxpayers. So retrospective amendment, I always say this particular, there are 2 amendments. One is also lurking around, and that is the DRI related, the Canon India's case of Supreme Court. And again, one more judgment announced by the Supreme Court day before yesterday, declaring the show cause notice issued by the DRI. Ultimately, my feeling is that it is also going towards the retrospective amendment, and then again challenge to the retrospective amendment. So Section 7 CGST Act and DRI related Section 28 Customs Act provision and the retrospective amendment, they are actually the law affair Vodafone of the indirect tax. And then confusing clarification at times by the CBIC, though CBDT is much more cautious and alert onto pragmatic on this. But yes, CBIC, quite a few clarifications leave much to be desired. Conflicting judicial pronouncements, and then the excessive delegation which we are making, particularly under coming back to GST regime, the badly drafted GST laws. I have been always maintaining GST is poorly misconceived, hastily implemented, badly misunderstood, and arbitrarily implemented law. And we are witnessing the fallout of this state of affairs in a short span of 4 years. Hardly, at least I have never come across a single tax legislation in my 3 decades old career where in the just short span of 4 years after it has taken the birth, there are so many challenges in the high courts through the writs against the various provisions of one single legislation. And this is not the work of the trigger happy lawyers. Believe me, there are substantial issues on which the constitutional validity of the provisions have been challenged before the high courts as far as the GST is concerned. The moot question is why. The one single answer is the poor design and the structure of the law, very bad drafting, loose drafting, and then its arbitrary interpretation. GST law also suffers from excessive delegation. It is a subject by itself, and in coming days, my feeling is that this excessive delegation is going to come at the center stage of the GST related controversies and maybe the challenge before the courts. Why there is a wide scope for arbitrary interpretation. Then another very disturbing feature is the apparently state GST authorities' unfamiliarity with the finer nuances of the litigation under indirect tax. GST, as you know, that we have the state government authorities and central government authorities manning this law simultaneously as in a conjoint manner. The indirect tax, which has been subsumed like custom, excise, service tax, has always have very well-defined process of litigation, starting from the investigation, search, and then again seizure, and then show cause notice, audit, audit objection resulting into show cause notice, adjudication, first appeal, tribunal. Whereas in the VAT particularly, the concept of show cause notice as prevalent under customs, excise, and service tax was never witnessed. And then GST is all said and done remains extremely complicated law. When there is a lack of insight into all these aspects, particularly at the level of the state GST authorities, then obviously it is an open invitation to the litigation. Another serious aspect of this is the tax frauds leading to stringent action. Friends, GST or VAT, whatever you call it, has always been a fraud-prone tax. And India is not the only country at the receiving end. World over, about 198 countries who have adopted GST as their indirect tax policy. All major countries, particularly if you talk about, forget about the small countries, if we talk about UK, overall European Union, Australia, South Africa, Canada, these all countries are suffering from the frauds taking place under the GST or VAT regime. The finest, probably the best form of GST or VAT implemented all over the world are probably the two countries, and they are New Zealand and Singapore. All other countries, Sibren Notion, the Netherlands-based international tax expert, has divided the entire GST world into three categories. And he has taken the cue from the epic Western spaghetti film of Clint Eastwood, The Good, the Bad, and the Ugly. Mr. Nosen divides the world, GST world, into the good, the bad, and the ugly. New Zealand and Singapore, he puts under the good. The UK, European Union, and Canada, he puts into the bad. And Brazil, the second country adopting GST after France, way back in 1954 and 1948, and then 1967, the second country, the Brazil, and then South Africa, both he puts into the ugly. I don't know, I'm afraid that whether India would give some consolation to South Africa and Brazil or not. And once there are tax frauds, obviously it leads to harsh action on part of the revenue authorities, which we are witnessing today, no need to dwell upon it. And as always happens, such stringent action or amendments which are made at times very impractical, ultimately it is the victims will be by and large the compliant and the honest taxpayers instead of the fraudsters who normally manage to get away. This is clearly we are saying under the GST, and we hope that this would be somehow, somewhere stopped here. Ill-conceived design and structure, no need to get into these frequent amendments. All these ills are actually, unfortunately, are plaguing the GST regime as of now. No doubt, GST Council is seriously trying to really get its act together and undertake the serious course correction. How soon it can be done, how pragmatically it can be done is really a matter of one has to only wait and watch. My personal feeling always would be, which I have time and again conveyed, is that unless it becomes extremely necessary, one need not now, government should not undertake any major amendments unless it is inevitable. Let these laws be settled down in the manner in which people have understood, all the stakeholders have understood, and simultaneously on the sideline, a fresh exercise should be mounted to redraft the entire law by roping in there are stalwarts and there are experts in this country who have a rich experience behind them from the professional world and also from the revenue department. Obviously, It should be a joint affair like the DTC, and a fresh new law should be drafted. And that should be, maybe it may take another 3-4 years, doesn't matter. Drawing the experience from the GST's 4-5 years implementation and from world over. Let us hope something will come out on this. Coming to friends, the tax litigation process under GST. Generally, the stage-wise process will start like assessment. Then if there be need be show cause notice, adjudication, appeals, which will have 2 layers. First appellate authority, which is in the income tax language, which many of you would readily understand, and that is CIT appeals. We would call it the Commissioner appeals, and appellate tribunal, which is as of now not in existence. From there to High Court, and then from there to Supreme Court. On the sideline, there is a revision powers vested in the authorities under Section 108. Then there is a prosecution-related provisions, including investigation, search and seizure and confiscation, and then compounding of the offenses. A very short point which I would like to make on assessment is that assessment need not be understood in the manner in which it is traditionally being understood by all. There is no such assessment provision under the GST law whereby the returns which are being filed by the taxpayer will be regularly assessed, and it will be the taxpayer will be intimated about the assessment and return. It was not there even under excise. It was not there even under the service tax. In other words, in income tax and the erstwhile VAT regime, the returns which were being actually assessed and assessment order used to be passed after assessment. No such provision exists. No such actually practice is also being adopted under it. It has been done away with in almost nearly 25 years, almost more than 2 decades back, right from excise when we switched over to self-assessment. Earlier classification list, price list, and RT12 returns filed by the taxpayers monthly, they were used to be assessed, and then they were used to be verified, and a copy used to be given to the taxpayer. This practice has been stopped long back. It is all self-assessment. However, then there are the assessment powers in the special circumstances given to the assessing officers, where he can undertake the assessment in case of certain circumstances. But we need not get into that. I'm just telling you that there is nothing like the monthly return assessment which would be undertaken or required under the GST. Then with this, let us now start with the show cause notice. Friends, show cause notice, the basic provisions are contained in Section 73 and Section 74. Rule 142 lays down the process. Basically, it is a machinery provision which lays down. Section 73 and 74 are the two only, I repeat, two only provisions which provides for the issue of the show cause notice if any tax is short paid or not paid, or refund erroneously granted, or ITC is wrongly availed or wrongly utilized. Now, the discussion which will now follow will be in the context of these two provisions, including Rule 142. The first is authority empowered to issue the show cause notice. If you see Section 2, subsection 91, defines the term proper officer, and it says proper officer in relation to any function to be performed under this act, that is CGST Act, means the commissioner or the officer of the central tax who is assigned that function by the commissioner in the board. There are two very peculiar expressions which is coming for the first time under GST law. It was never there in excise, custom and service tax, and that is commissioner in the board. And both are separately defined. Commissioner in the board has been defined. This commissioner in the board has been used in certain sparingly in some about 6 to 7 sections provisions. And you will find basically he is a officer of the level of the deputy secretary or joint secretary in the board. And he has been given powers under certain specific circumstances. The why proper officer word is important, because if you carefully read Section 73 subsection 1 and Section 74 subsection 1, you will find that it says the show cause notice has to be issued by the proper officer. So if it is issued by any officer who is not a proper officer for the purposes of Section 73 or Section 74, then the notice will be without authority of law. And therefore, it will be null and void at the threshold itself. And therefore, one needs to understand that whether the notice has been issued by a proper officer or not. Why did circular dated 5/7/2017, the board has actually specified the proper officer for the for various provisions other than registration and composition under the Act, and they were assigned the various functions for which included Section 73. This circular was amended thereafter by the circular dated 9th February 2018, whereby the board has designated all officers up to the rank of additional or joint commissioners of central tax, including the superintendent, as the proper officer for issuance of the so-called notices and orders under various provisions of Section 73 and 74. The sum and substance of this board circular is that the right from superintendent, then assistant commissioner, deputy commissioner, joint commissioner, and additional commissioner, these officers are empowered to issue a show cause notice and also issue an order in terms of under various sub provisions of Section 73 or 74, because they are designated a proper officer for this purpose by the board by the latest circular dated February 18. Two important aspects here is, the one is an inspector level who is subordinate to superintendent. An inspector cannot issue a show cause notice, one, for under Section 73 or 74. Similarly, the commissioner has also not been designated as an officer who can issue a show cause notice and adjudicate the matter. I'll come to that at a later point of time. This is an interesting departure from the erstwhile practice being followed under excise, customs, and service tax. The first aspect which we need to see, there are certain established principles of law which need to be kept in mind when we actually deal with the show cause notice. Just as the proper officer only can issue a show cause notice, board has also notified by the circular dated 9/2018 the monetary limits for the issue of the show cause notice. This is mainly for the proper and demarcation of the work between the officers and augment the scarce resources available with the department. So the work is basically divided based on the monetary powers, so that one particular officer does not get loaded under the mounting show cause notices. These monetary limits are notified by, I will not go into the details, these are all available on the CBIC site. I'm only giving you the reference. The first question that arises here is, if an officer who has been, for whom the monetary limit is prescribed, like superintendent 10 lakhs, or an assistant commissioner, deputy commissioner 50 lakhs. I'm just giving you an example. I'm not going into too much nitty-gritty. If he issues a show cause notice for an amount, demanding an amount which is in excess of the monetary limit prescribed for him, will it become invalid? This is the first question we need to understand. Such monetary limits were also prescribed by the board under the erstwhile excise service tax regime also, and by the circulars. And this question had arisen and reached the Supreme Court in the context of in the case of power chemicals, where the precise question was whether a show cause notice issued by an officer in excess of the monetary limit laid down for him will become invalid. The three judges bench of the Supreme Court in power chemicals said that administrative direction of the board allocating different works to various classes of officers cannot cut down jurisdiction vested in them in the statute and may be followed by them at best as a matter of propriety. It was further held by the Supreme Court that the issuance of the show cause notice or adjudication order contrary to such directions could not be set aside for want of jurisdiction, especially as no prejudice is caused to the SSE because of that. This is an important judgment whereby the Supreme Court posed the challenge to the validity of the show cause notice and the order passed by an authority in excess of the monetary limits prescribed by the board. It is our common understanding that the board circulars are binding on the departmental officers, even if they are contrary to the law. However, this particular proposition of law has to be seen in the context of each case. It need not be and cannot be taken as a universal law of application. The Supreme Court said that they are supposed to follow these administrative directions as a propriety, but in the absence of anything in the statute which actually requires the officer to adhere to that monetary powers, but otherwise who is competent to issue the show cause notice, the board circular on the monetary limits cannot be a ground to post the proceedings. Similar view was expressed by Supreme Court in Avon Construction Products, and very recently in the context of GST, this issue had been raised in terms of this February 18 circular before the Gujarat High Court in Palak Designer Diamond Jewelry case. The first matter, it was challenged. It was a case of seizure. The seizure had been challenged. Then High Court directed the release of the jewelry and the seized stock on which some few crores of duty had been, GST had been demanded on execution of some bond of some 50 lakhs and all. This was challenged by the revenue by way of a review petition. It was dismissed. Against that, the revenue has approached the Supreme Court, and there is a Gujarat High Court judgment has been dismissing the review petition has been stayed. This is one part of the story. This seizure had ultimately resulted into the issue of the show cause notice. This show cause notice validity was challenged on the ground being in excess of the monetary limits laid down by the board circular of February 18. And this was actually, this challenge was dismissed by the Gujarat High Court in 2019, TIOL 1756, High Court Ahmedabad, following Pawa Chemicals in Supreme Court. And High Court then referred back the matter with some directions. Based on those High Court's observations, following the Pawa Chemical Supreme Court, Tribunal Ahmedabad bench has ultimately dismissed the challenge to this validity of the show cause notice in Palak Designer case on the ground it exceeded the monetary limits. This is the judgment in the context of GST. One has to. So one may have to be quite circumspect and skeptical before rushing to the court challenging the show cause notices issued under the GST law by the GST authorities merely on the ground of it being in excess of monetary powers. One may have to do their homework very properly. No doubt, on the sideline, the question arises that if the board knows the position that their administrative direction may be flouted by the officers and otherwise the statute do not provide them to reach the monetary limit, why does the board continue to do this? Or otherwise make it very clear legal in a way that legally, statutorily, the officers can have to adhere to that particular monetary limits. There has to be, the department cannot have it both the ways, in my personal respectful opinion. The other important principle is show cause notice is a condition precedent to a demand. This is a well-settled law from since ages. One of the most important judgments on these are Madhumilan Syntax and Gokak Patel. Later on, followed also in metal forging. These are the three telltale judgments of the Honorable Supreme Court. No demand can be raised, much less recovered from any taxpayer on any count whatsoever without issue of the show cause notice. In Madhumilan, Gokak Patel, Supreme Court even said that a post ficto demand show cause notice will not validate the demand. That is what even Supreme Court said in Gokak Patel. So any recovery during audit or during investigation or by the department, jurisdictional authorities, but without issuing the show cause notice is a bad in law. It is without authority of law. It is a right of the SSE to ask for the proper show cause notice, even though he may actually accept the objection. Then whether he wants to go ahead with the litigation or not is a different matter. But there is no authority in this which can really enforce a demand during investigation. Similarly, in the same breath, a mere letter or communication asking for the payment is not a show cause notice. Friends, I would here like to say one point. every communication coming from the department should not be and is never a notice. We have to be very clear about how do we describe or call, or how do we call a particular, what do we call a particular notice. We have been listening, even if the summons comes, the taxpayer would call his consultant, sir, jara notice aaya hua hai. Even if a center letter, simple letter or communication comes, he will come, sir, notice aaya hai. For him, taxpayer, it is understandable. For him, every single letter or communication from the department is a notice. But the tax professionals cannot get into that. It is its own pitfalls and it has its own psychological issues. Or when we say notice, it has to be under section 73 or 74. All other communications cannot be treated as or equated with notice. It is in this context we have to again see if a letter or communication comes from the departmental authority, whatever may be the authority, asking for the payment on any count or reversal of the ITC, then it is not a show cause notice and it is not binding in law on the SSC. He is not obliged in law to really. He may give his explanation, but he is not obliged in law to adhere to that dictate and make the payment. In fact, in Sidwell refrigeration case, Tribunal Delhi bench said that a letter of superintendent communicating the audit observations with request to pay the duty is not a show cause notice, and it was also held by the tribunal that such letter is not a valid appealable order and no appeal can be filed against such letter. And therefore, if the audit objections, and they are on the rise now under GST regime, and it will only be rising in the coming days, the audit objections seeking some compliance, standard, pay the tax or reverse the credit with interest and penalty, the taxpayer should and can respond to that, but he need not, if he does not agree particularly, he is not obliged in law to make the payment in terms thereof. And therefore, it is not a notice. And these are the judgments on which this particular law has been laid down very well. Whether the show cause notice should be in writing, there are certain fundamental essentials of the show cause notice. Let us shortly deal with it. In Volta's case, it was held by the tribunal that a show cause notice under section 28 of the Customs Act or section 11A of the Excise Act has to be in writing. I mean, a oral show cause notice whereby the orally it is conveyed or by email something is conveyed, that is not a show cause notice. A show cause notice has to have the basic details and all the prerequisites as mandated in law and as mandated by various principles, which we will be seeing. Is the oral show cause notice valid? Can a show cause notice be waived? This particular question had arisen in Virgo Steel case, where Supreme Court in the peculiar case, it was a case of the under customs relating to the seizure of the goods. And in custom, there is a provision where the importer or exporter, in order to really, cut short the lengthy process, he is given an opportunity to waive the show cause notice and seek the release of the goods, and also to put forward in case any demand has arisen. However, no such provision existed. In one of the important judgment on this recently held in the context of service tax is National Cooperative Bank Limited, where the service tax demand was actually honored by the bank based on the objections raised by the audit. Later on, they found that whatever they have paid is much more higher than what should have been payable then. They had even asked for the department had asked them to close the proceeding also. Company had not accepted that closure, but they had made the entire payment, which was found to be higher than what they were supposed to pay. And then company challenged it that our liability is actually only about 7 to 8 lakhs, resulting into excess payment of about 45 lakhs, which they asked for the refund. Department said that, you have voluntarily paid and you have asked for the closure, and there was no need for the show cause notice because there was a closure. High Court did not agree to this contention of the revenue, and they said that when the company has not accepted, any oral communication is of no use, and the show cause notice has to be must, and the ruling went in favor of the bank. So there is a circular of 1997 when board has, even under the customs, has actually clarified that ideally when substantial questions of law are involved, the so-cause notice should be always issued so that both the sides have a proper competent authority can get into the matter in a proper and meaningful manner. And the waiver of the so-cause notice should not be encouraged. A notice must contain all the details. One of the most important and the celebrity judgment, it has been a guiding searchlight for all these years, is of the Supreme Court in Vrindavan Beverages. In Vrindavan Beverages, the Supreme Court, if I were to quote Supreme Court exact wording, the court says, the so-cause notice is the foundation on which the department has to build up its case. Friends, let me repeat this. The so-cause notice is a foundation on which the department has to build its case. If the allegations in the so-cause notice are not specific and are on the contrary vague, lack details, and or unintelligible, that is sufficient to hold that the noticee was not given proper opportunity to meet the allegations indicated in the so-cause notice. A so-cause notice cannot be vague. Allegations has to be very explicit and clear. One of the cardinal principles of law is that an assessee or the noticee or a taxpayer cannot be expected to presume the case of the department. It has to be very clearly brought out in the so-cause notice itself. And as a matter of fact, if a particular so-cause notice is vague, then instead of going into the mind of the revenue officer, what he might have actually hinted, what he might have actually thought of, what he might have probably thought to allege, we are not required to undertake this type of exercise. We have to specifically challenge the vagueness of the allegations by the reply. One need not assume, presume, or get into the shoes of the revenue officer what he might have probably thought of. And these similar views have been expressed by the Tribunal Mumbai in Mehta Pharmaceuticals and Bikhalal Dwarkadas. Friends, these are all the fundamental principles of law which are equally good for the GST regime also. One thing I would like to point out here is the fundamental concepts, and for that matter, the substantial provisions of the GST law are not materially different from the erstwhile excise and service tax, to some extent VAT, and now currently a custom legislation at all. Somehow or other, we are looking at the GST law with the, with something as if it is something new. It is not. Our eyesight is the same. Our eyes are the same. Probably we are wearing the glasses with the different colors. And everybody is changing the color. Everybody has his own color to look at this law. And this probably is also one of the major reasons that why the confusion and the conflict are arising in the day-to-day in this law. And that's why I say these are the basic fundamental principles relating to so-cause notice, which have been laid down in the context of the erstwhile indirect tax regime, which will equally hold good even for the GST. So-cause notice shall not be based on assumptions and presumptions. One of the most important case on this, which have been holding field since last almost more than 40 years, is of Oath Sugar Mill, where the demand of clandestine removal on the basis of clandestine removal was raised by the department purely on the basis of assumption and presumption, on the basis of some supposed production company would have undertaken. And once the evasion and clandestine removal cases come to the fore under GST regime also, all these judgment would also become quite important. Then, should so-cause notice indicate the amount demanded? Yes, the so-cause notice must indicate the amount demanded. Here there are conflicting views, and in Bihari Silk Mill, there is a larger bench decision of the tribunal. It's a majority decision, but larger bench decision, where it was said that so-cause notice issued without quantification of demand will also be still valid. It was held that the word specified. I'm referring to this particular point because the language of section 73.1 and 73.2, 74.1, and the as well as 73.10 and 74.10 are pari materia with the language of the rules under section 11A of Excise Act and section 73 of the Finance Act 1994 relating to service tax. And in the context of this, the larger bench said that the word specified used in the section is not same as the determined. While there is an element of definitiveness in specifying an amount, describing or stating in detail is the same as specifying. The majority had relied upon Hindustan Aluminum case of Delhi High Court, where, however, in JBA printing ink case, Madras High Court single judge had said that a so-called notice which does not quantify the demand is not valid. This single judge judgment was distinguished by the Delhi High Court in Hindustan Aluminum, and this was followed by the majority in the larger main decision of BRE Silk. However, in Gwalior Rayon, it was held by the High Court that non-mention of the necessary particulars in the notice is not a valid ground to quashing the show cause notice. In my personal opinion, these judgments may come under the reconsideration or should come under reconsideration, the ratio laid down therein. If we very carefully see section 73(1) and 74(1), it uses the same words that a proper officer may issue a notice to the taxpayer requiring him, that is registered person, requiring him to show cause as to why he should not pay the amount specified in the notice. And then thereafter, after adjudication process, the amount is determined as payable by an order under 7310 or 7410 by the proper officer. So, and it is a well-settled principle of law that ultimately whatever amount is determined as payable through the adjudication process by the proper officer cannot be in excess of the amount specified in the notice. So unless the amount is specified in the notice, it becomes like an open-ended scheme, which may not be correct. So I personally feel the observations and the law laid down by the Madras High Court single judge in JBA Printing Inc. Limited case is a proper law, and so-called notice needs to have a specific amount. We may see some fireworks in the coming days, maybe on this issue. Coming to a so-called notice issued under the wrong provision, is it valid? By and large, in all these judgments, it is a law that mere issue of the so-called notice under a wrong provision will not invalidate the notice if the powers, the allegation, the power to raise that allegation can be traced to a particular provision in the law. However, in the context of the penalty, in Anup Wayer's case, it was held by the Supreme Court that if an SSE is given a notice for a penal action under one clause which was not applicable, and SSE was not given an opportunity to meet the case in sustaining the penalty in another clause, then it is not valid. This is very important. No penalty on a taxpayer can be imposed without first putting him on the notice. And when there are multiple provisions applicable, as far as the penal action is concerned, a citing of the wrong provision may be one thing, but thereafter, without affording an opportunity to the taxpayer, if the penalty is basically imposed on him under another penal clause, then that will not be valid. So here there is a departure from the law that the wrong provision, mere wrong provision will not invalidate the notice. Issue of corrigendum or addendum to so-called notice. At times one come across that the authority who has issued a so-called notice may also issue a corrigendum after a while, or some addendum, corrigendum for correcting some mistake, or addendum by adding certain material particulars in the show cause notice. In this context, question sometimes arises whether this corrigendum or addendum shall be treated as a fresh show cause notice, or whether the limitation period should be computed from the original date of the original notice or from the date of corrigendum. In Steel Authority India's case, Supreme Court said that it appealed the tribunal order where the tribunal has held that a belated corrigendum issued to the show cause notice for enlarging the scope of the first notice was made in law. Similarly, if the corrigendum is merely to rectify some technical errors or minor errors, it will not be treated as a fresh notice. However, if the corrigendum or addendum substantially alter the character of the show cause notice, practically making out a new case or adding some allegations which substantially alter the nature of the entire case, then it cannot be treated as a mere corrigendum or addendum, and it may have to be treated as a fresh notice, and the limitation period will have to be reckoned considering the date of the corrigendum addendum. These are certain principles, and which applicability of which will depend on the facts of the each case. Whether the principle of res judicata applicable to show cause notice. Res judicata is a Latin term, friends, which is a thing which is already adjudged. In the context of an adjudication, it implies that a matter once adjudged and having attained finality cannot be reconsidered. There has to be an end to the process, litigation process. Department cannot go on reopening the case on one pretext or another. Once they have decided a particular matter in the context of the particular issue which they have raised, then they cannot go on reopening that particular issue which is settled, suppose in favor of the SSE on another pretext. And there the principle of res judicata may come into play. In metal extruders case, the Bombay High Court has said this principle would apply if a show cause notice is issued on the same cause of action and for the same period on an issue is the same, that is of the first show cause notice, then the show cause notice will be made in law on the principle of res judicata. In Siddhartha Tubes also, the tribunal said that a second show cause notice for a same period on different grounds cannot be issued after the matter has been adjudicated. This is very interesting. If a show cause notice for a particular period is issued on a particular ground, and if it is adjudged in favor of the party, or while it is pending, suppose, then also department then cannot issue a fresh show cause notice for the same period on different grounds. And this was the same view which was taken even in Paro Food Products case. In Spintech Limited case, tribunal said that once the matter has been adjudicated, second show cause notice on the same set of facts and changing the stand is not sustainable, even if tribunal had remanded the matter for re-adjudication. When the matter is remanded for fresh adjudication, department cannot really get into and create a new case because the remand order of the tribunal is binding on the department unless otherwise separately challenged and set aside. So directions in the remand order, department cannot go beyond the scope of those directions. This is again an important aspect. Another very interesting issue at time arises is, can a show cause notice prejudge the issue? In all these cases, the Supreme Court, High Court have held that if the reading of the show cause notice shows that the authority has already made up his mind and has already formed up his conclusion, then it will be like prejudging the issue, and therefore giving an opportunity of representation to the taxpayer and giving an opportunity of hearing to him will be only an empty formality. In like SBQ Steel Limited case, AP High Court noted that the show cause notice has been frequently using the word, it is clear, it is clear, it is clear from this, it is clear from this. This was treated as a, the practically arriving at the premature judgment, prejudging the issue by the High Court, and the proceedings were quashed. This is very important. It will again depend upon the reading of the show cause notice. Generally, one would find the show cause notice only says, it therefore appears. It therefore appears. Nowadays, nobody makes this mistake of saying that it is very clear. But this principle can be kept in mind. The another important is aspect, and which is actually hurting everybody every now and then, and that is validity of the amount recovered during investigation and consequential refund thereof. One of the most important case recently decided by the Madras High Court in the Nandi Dal Mills Limited case, and we have quite a few judgments under the erstwhile regime, Dabur India, Vodafone. There are a catena of decision. Ultimately, they are all in a way reaffirming the principle that no demand, no amount can be recovered, whatever may be the justification, no amount can be recovered from a taxpayer without following the due process of law and without issue of the show cause notice. Therefore, if any amount is recovered during investigation by force, though in the statement it will always come out that the taxpayer has paid it voluntarily, then also the validity of such recovery can always be challenged by the taxpayer. They can say that this was not voluntary, or even though initially if they have willingly paid it, later on they realize that it was a mistake of law on their part to make this payment because it was never payable. This will again depend on the facts of the each case. But the principle which we are actually talking about is that during investigation, if any amount is recovered by the department, it is actually lying in the nature of the deposit only. When the so-called, if you see, whether based on the audit objection followed by a show cause notice or normal departmental investigation. When some amount is recovered, whether tax short paid or not paid or ITC reversal, when it is paid and the taxpayer has not actually agreed to that, there will be a show cause notice. That show cause notice will have two paragraphs in the end. Why this amount should not be recovered from the SSE and why the amount already deposited should not be appropriated against the amount demanded and determined as payable. If the amount paid by the taxpayer already stands the credited in the coffer of the government, if it has already been recovered in the form of tax, though it might have been paid as a tax because it has to be paid under the some category of tax, CGST, SGST. But if it is already paid as a tax, there was no question of any appropriation again. It means till that time it is only lying as a deposit in the hands of the government. And therefore, it is the SSE's right to not only challenge this recovery, it is right to call for the show cause notice and even ask for the refund also. And here, these principles laid down. Nandidal is a very important judgment which is rendered in the context of GST law, and where though it more or less the principles which have been discussed are the same for the decades now. The important thing for all the taxpayers and tax professionals really to take note of is this, that there is no compulsion, there is no obligation in law on part of the SSE to make the payment of tax during investigation if he does not agree. And there are enough safeguards which can be taken, which are also provided in law against such illegal recovery. Generally, a show cause notice will have a well-defined structure, which has been actually explained by this board master circular, though this circular basically is in the context of the excise and service tax, the more or less it will have the relevance even under the GST regime. There's a good master circular issued by the board, embodying certain important principles which have already been laid down by the various court judgments. This circular is also available on the site. One should go through this. This circular can become quite relevant under GST. So generally, it will be introduction of the case, legal framework, factual statement and appreciation of evidences like statements recorded and other document analyzed, document recovered, then discussion, the analysis and what are the conclusions drawn. And based on that, the allegations will be discussed. Then there will be, if there is an extended period of limitation, then the justification for actually invoking the extended period of limitation will also be discussed. Then calculation of duty and other amounts due. And finally, the authority to adjudicate. There are last two paragraphs which will say why this amount should not be recovered along with interest, why penalty should not be imposed, and the SSE is hereby required to show cause to so and so within 30 days of the receipt of this notice. And if he fails to do so, file the reply within 30 days or does not appear for hearing, the case will be adjudicated on the basis of the records. And then last paragraph will be, this notice is issued without prejudice to any other action which may be taken under any other law for the time being in force. I'll come to this part also when we deal with the adjudication. Coming to pre-notice consultation. Friends, in pre-notice consultation, it is the outcome of the TARC recommendation. Dr. Parthasarthi Shom, the Tax Administration Reform Commission, they had made some very sterling recommendations. And one of the recommendations pertained to the pre-notice consultation, which was intended to avoid unnecessary litigation, whereby both the sides actually sit on the table and then they find whether seeing the justification in the allegation, if the SSE can also take a call whether to go ahead with the litigation or not. And if looking at the futility of the charge made by the department or proposed to be made by the department, the authority can also look into whether show cause notice is required to be issued or not. This concept was actually implemented through board circular, not through the statutory provisions under the erstwhile regime. However, in GST, it got the statutory recognition with the insertion of sub-rule 1A in rule 142, wide notification number 49/2019, dated 9th October. And whereby DRC 01A was made mandatory to be issued before issue of any show cause notice under section 73 or 74 There are other provisions also. I'm only referring to these two. And this DRC 01A, though the description is statement, it has a nature of the pre-notice consultation. And this was made mandatory because the word used was proper officer shall communicate this statement in Form DRC 01A, whereby the SSE was thereafter given an opportunity either to accept this entire thing and pay the money through DRC 03, or else he can make the part money payment, or he may even refuse to make any payment and then give his response in part 2 of DRC 01A. Then thereafter, in a very disturbing and unfortunate amendment on 15th October, merely after 1 year, the word shall has been actually replaced, substituted by word may. So now the provision of 1A reads like proper officer may communicate. So he is now not under the legal obligation to issue the DRC 01A. Has it been made discretionary? And if it is made discretionary, then where is the need to keep this provision in the, first of all, in the statute book itself? Is it not really the mockery of the justice? In any case, the important question, serious question that arises here is whether this pre-notice consultation is really beneficial for the taxpayer, or is it a trap for the taxpayers? That is the important question we have to ask. It is already touted, it is already been projected as a beneficial provision. If one were to see that in pre-notice consultation, what happens is a communication will be sent to the party having more or less all the ingredients of a show cause notice, that this is what the proposed allegations of the department, and this is what the department proposes to do and raise the demand for an X amount. And however, you are hereby given an opportunity through this pre-notice consultation to come forward and give your views. When an SSE in good faith who sees either the absurdity, futility, or non-maintainability of the allegations in the pre-notice intimation goes fully armed with all the submissions, almost in every case happens is these submissions are ultimately invariably rejected by the authority. And then follows a proper, the regular show cause notice in terms of the provisions of section 73, 74. This is exactly what was happening under the erstwhile excise service tax and customs. And this show cause notice, which is a regular show cause notice as per the statute, will narrate the whole history of how the pre-notice consultation was undertaken, how the charges were communicated to the party, what are the party's submissions, and if the taxpayer is lucky, he may even give, the authority may even give the reasons for not accepting the submissions made by the party. Otherwise, though, submissions have been gone into, I have considered carefully and I do not find them acceptable, I therefore reject them. And then it says, therefore you are hereby required to show cause again as to why the amount should not be recovered from you. Now, friends, please see the whole absurdity and futility of this exercise. The earlier pre-notice consultation related intimation practically dons the character of the show cause notice, giving all the, explaining all the allegations, against which that party has already filed a detailed reply, which has already been rejected by the officer. And again, the show cause notice is merely practically the replica of the pre-notice consultation intimation. Now, what will remain with the SSE in his, arm chest, what he is going to defend himself with? And therefore, what actually TAR committee had actually proposed and, recommended with whatever may be the, the noble objective at the grassroots level, at the implementation level, it turns out to be more often than not a trap for the SSE. Because the SSE has already exposed his defense at the pre-notice consultation stage to the department. Now, department, having fully aware of what is going to be the line of defense of the SSE, knows how to take forward the further proceedings in this regard. Personally, the manner in which such pre-notice consultation are carried out I am personally dead against this entire process at all. It is better this pre-notice consultation process is completely done away with and it is omitted from the statute book. It is better for the taxpayers, whatever may be the contrary claims. And having said that, in all these judgments, it has been held that pre-notice consultation, if it is not adhered to the board circular under the erstwhile regime, if they are not adhered to, then the subsequent so-called notice will become invalid. At least this is some secure given by the High Court. Back Office, Novel Security Service, and Omex New Chandigarh, the latest case, these are all on the same line and they are in the context of GST. The other judgments are also in the on the context of excise or customs or service tax. But one word of caution again, I would reiterate my personal view on this, that pre-notice consultation should be, if at all somebody is eager to participate in pre-notice consultation, one has to be extremely careful and skeptical with the pitfalls of going into such type of pre-notice consultation process being clearly understood. Personally, I never encourage my, to participate in such type of pre-notice consultation. Then comes the limitation period. There are two provisions, section 73 and section 74. We have seen that 73(1) speaks about, both the sections speaks about the issue of a so-cause notice by a proper officer in case he observes that there has been a short payment of tax or non-payment of tax, or the refund erroneously granted, or ITC wrongly availed or wrongly utilized by a registered person. And in that case, he can issue a so-cause notice to such person, and along with the so-cause as to why interest also should not be recovered from him under section 50. Both the provisions obviously provide for the limitation period within which the so-cause notice has to be issued. In the colloquial language, I would say, which is section 73 provides for the normal period of limitation and section 74 provides for the extended period of limitation. In normal period of limitation is when there is an absence of fraud or willful misstatement or suppression of facts with intent to evade payment of tax. Whereas in case of 74, when such elements are, any of these elements is present, fraud or willful misstatement or suppression of facts with intent to evade payment of tax, then the extended period of limitation will be applicable. It shall be noticed, I have already dealt with this, but in fact 73(1) uses the word shall. So is section 74(1) also, that shall issue a so-cause notice. It means before any recovery, so-cause notice is mandatory. Then it should also specify the amount of tax or ITC proposed to be recovered, proposal to recover the interest under section 50, and notice should also propose, though section 73(1) and 74(1) does not speak about that, notice must invariably show as to the clause under which the penalty is proposed, because without notifying that, a penalty cannot be imposed on a party. Time limit which is prescribed in case of 73(2) is notice under subsection 1 shall be issued at least 3 months prior to the time specified in subsection 10 for issuance of order. And in other words, the time limit under 73(2) which is prescribed is linked to the time limit prescribed for the passing of the order, adjudication order by the authority. And what is that time limit? 73(10) says the proper officer shall issue the order under subsection 9, that is after considering the representations made by the party within 3 years from the due date for furnishing of annual return for the financial year to which the demand or erroneous refund relates. So the time limit for passing an adjudication order is 3 years from the due date of furnishing annual return for the relevant financial year. And it is keeping these 3 years in mind, a normal period of limitation prescribed is 3 months prior to these 3 years. In other words, a show-cause notice has to be issued within within 33 months by the proper officer. This period is extended under 74(10). Through a table, I have explained this. relevant financial year to which suppose demand relates is 17-18. The due date for furnishing the AR, and when I said due date, I am also talking about the extended due date. The extended due date for furnishing the annual return was 5/2/2020 for category A states and 7/2/2020 for the category 2 states. From here, the time limit shall be reckoned in terms of 73(2), read with 73(10), which is at least 3 months prior to that. So the authority can now issue the notice within 33 months of 5/2/2020, which will expire on 5/11/2022. In other words, any demand relating to 2017-18 can be raised by the proper officer before 5/11/2022. That is still more than 1 year available to him for raising the demand of 17-18. For 18-19, he has got time up to September 23, 30th September. For raising the demand for 19-20, he has got a time limit up to 21/12/2023. This is all, sorry, it should be 31/12. I'm sorry, there is a typographical error. And this is because the time limit is required to be computed from the due date of furnishing the return. Now, what is the period under extended period of limitation? If any of the elements like fraud or willful misstatement or suppression of facts with intent to evade tax or take the wrong ITC or wrongly utilize the ITC is present, in that case, the proper officer can serve the notice, should serve the notice at least 6 months prior to the time limit specified under subsection 10. And 7410 speaks about the passing of the adjudication order within a period of 5 years from the due date for furnishing of annual return. So what will be the time limit if there is a suppression or evasion? We call it evasion cases. In case of evasion, the time limit under 74 will be for 17-18, it will be August 24. For 18-19, it will be June 25. And for 19-20, it will be September 25. Friends, appears to be the very, very long rope given to the departmental officers. There are 2 reasons for this. This time limit of 3 years and 5 years more or less have been continuing from excise and service tax. Initially in excise, it was 6 months, it became 1 year, and then it became 2 years. In service tax, it started with 1 year, then it became 2 years, and then 30 months. Now, obviously, the departmental officers, busy as they are so much, so they have many things, other things to do, may not get too much time to really issue the notice in time. So obviously the board has come to their rescue by extending the time limit for issue of the so-called notice time and again. Fortunately, the evasion cases where there are evasion alleged, the extended period of limitation has remained static at 5 years during all this period. That is the only saving grace for the taxpayers. Though the normal period of limitation has always been extended from time to time, but extended period of limitation has remained 5 years. However, what has happened under GST regime is the concept of relevant date has been quietly buried. If you read section 11A of Excise Act or 73 of Finance Act 1994, the time limit of 30 months or 2 years or 2 years or 30 months or 5 years was required to be reckoned from the relevant date. The relevant date itself has been defined under the section. Generally, it is the date of filing of the return, and in case the return is not filed, then the due date on which the return is required to be filed. So in case of excise, it was generally quarterly return or monthly return. In case of service tax, it was a 6 monthly return. So effectively, in service tax, though it was 30 months, the authority was getting 37 months for raising the demand because the returns were half yearly. But that is fine. But it was always linked to the date of filing the return or due date of filing the return. Here, the time limit has been linked to the last date for the issuance of the order. This is the legacy from the VAT regime. This was never a practice in excise and service tax for all these decades. This is the legacy from the VAT regime, and it has serious repercussions for the taxpayers because of the extraordinarily long period of time which the department gets on account of this proposition. Another serious matter here is because the notice is required to be issued by the officer at least 3 months or 6 months prior to the period prescribed, 3 years or 5 years, for the passing of the order. Nothing stops the officer from issuing the so-called notice at the 11th hour. This was happening in VAT. This can happen even under GST. Nothing will stop him from issuing the notice just before the period of 33 months getting expired. And then he has to pass an order within the 3 years for normal case or 5 years within the evasion case. He will have hardly 3 months or 6 months to adjudicate the matter without following and in the haste and putting the, in a very, very mechanical manner, the orders are likely to be passed. This has been happening in VAT. This can happen even under GST. I have no doubts about that. Another important thing is that why there should be now linkage to the annual return. Here something the tax authority, our tax professional bodies and taxpayers bodies can also take up the matter. When we are on digital, everything is available on the screen of the officers. Any officer sitting across anywhere in the country can look at the overall, the activities and the transactions of the authority of the taxpayer. Why should there be this time limit of 3 years? Forget about extended period. So giving some benefit of doubt. But why should there be a time limit of such a long period of 3 years as a normal period of limitation? Where is the need? First of all, it should be delinked from the annual return. It should be linked to the GSTR1 only, number one. And secondly, the time limit should be ideally brought it down to 1 year only. There has to be some serious representation on this aspect from the professional bodies and the trade industry bodies, as I personally feel. And the last part, the unusually long period, which is right now also available to the officer for raising the demand for the years which have gone by, 17, 18, 18, 19, and 19, 20, and now obviously 2021 will also come, is probably is because of the repeated extension granted for the furnishing of the GSTR 9. While seeking the extension for filing the GSTR 9 due to normally because of the technical glitches, and now in last 2 years because of the COVID-related, COVID-induced situation, justification, I'm not against the justification. Why are we seeking the extension of due date for furnishing the GSTR 9? Why can't we say that you do not extend the due date for furnishing annual return, but you waive the late fee and penalty for by prescribing a particular date by which if the AR is filed. Your due date remains the same, but your late fee and penalty is waived. Once the due date is actually frozen on say 31st December of the next financial year, then at least the time limit for issue of the so-called notice will also get frozen. The unusual long period which is gone away, which has been made available is probably our own doing when we went on asking for the extension of the due date for furnishing the AR. We may have to be extremely careful. I'm sorry to say, I've been always dead again. I have written in my articles in Tax India Online on this, that by seeking the extension of annual return filing date, we are inviting only the problems for us. Today, a normal taxpayer having a turnover of 50 lakh or 1 year, 1 crore, and it can even include the professional fraternity also. The individual professional having a gross income of 50 lakh, 1 year, 1 crore, 2 crore also can have a hanging sword of the so-called notice for first year of implementation, 17, 18, right up to November 22. Is it really desirable situation to be in? I hope that henceforth we will be much more careful in seeking the extension of due date for furnishing the annual return. Then service of notice. There are different modes of services which have been provided under section 169. The important point is whether the modes of services prescribed under section 169 are alternative or are to be followed sequentially. My personal view, and I'm not going into too much detail on this, but going by the ratio of the principle laid down in the erstwhile excise service tax and custom regime also, which is in present in vogue, the modes of services prescribed are to be followed sequentially and not alternative, though the language has been kept very beautifully well. There could be some legal disputes on this aspect also in the coming days, because section 169 has been couched in a very, very devilish language. Statement of demand. The statement of demand comes when there is a frequent notice is to be issued for the subsequent period. This practice was introduced in excise and service tax few years back and has been continued under GST, whereby the officer need not really narrate the whole story again in the SOCOS notice to be issued for the subsequent period when there is a recurring effect of a particular dispute. And this is all right. I mean, this is just to save the time, energy, and paper. So he can simply issue a statement of demand, tabulate in a tabulated form, and simply say that this notice is based on the same grounds and or basis on which the earlier SOCOS notice for the earlier period has been issued. What is important is the statement of demand, when it is issued for the subsequent period, the questions of allegation of fraud, willful suppression is not permissible to be raised. Because once the facts are within the knowledge of the department, then based on the same facts, department cannot go on alleging the evasion and willful suppression again and again and issue the SOCOS notice. This principle has been firmly laid down in the Nizam Sugar case. We will see about this judgment by the Supreme Court. This principle has been embodied in the statement of demand related provision, and therefore there cannot be an allegation of evasion in the statement of demand for the subsequent period. And if the department has missed the boat for issuing the demand for the subsequent period, it cannot then, they revive the issue by alleging evasion against the party unless there is a conclusive material to support the allegation. And therefore, no penalty will be really, penal action can lie when in case of a demand raised to the statement of demand. Friends, then we will take up the extended period of limitation and certain important principles of law. It is 5:32. We will take only a 5-minute comfort break.